So, good evening once again, and then welcome to another interesting session. So, this one now is something that we have been, I don't want to say deliberating about for the longest time now. Do you understand? But then Jerry has been pressuring me because I wouldn't say that thing was bad. He threatened me that I must do this topic. So, today we are going to do it. Yeah. Now, what we're going to look at today is more or less certain concepts. So, if you look at what we learn, especially most of the guys that are directly like my students, most of the or generally what we learn is things like support and resistance trend lines, things like Fibonacci retracement. Do you understand? Flip zones and all, and then entry confirmations, candlestick confirmations, and then there's a whole like other part of information, side of information that you guys don't directly get explanations from me. And then when you hear them, you're always wondering, oh, what's this person talking about? Is this thing different from what I've learned? Do you understand? Is this thing better? Is it much more profitable than what I've learned? Do you understand? Now, one thing, especially in short, everybody that know me know that I'm a preacher of everything in forex trading has its own pros and cons. Everything is high. As long as it's high probability, then it means that it has series of losses and then wins. Do you understand? It will never be 100%. Do you get it? It's more or less whatever concept you pick, it should be what is much more simpler for you. Do you understand? That's like my first or that's like my basic philosophy. Do you understand? On the other hand, I'm still someone that believes that, okay, before I can pick something that is simple for me, to a certain level, I need to understand what it is. So if I don't know what something is, I'll not be able to know if it's actually simple for me or if it could have actually made a difference to my trading. Do you understand? So that's what we're going to be looking at today. We're going to pick a series of terms. Do you understand? And then look at them. Do you understand? So you see, one thing with our trading, whenever we come to our charts to do analysis, we're first looking at market structure, zones. Now, zones we're looking at, okay, where can we potentially enter trade at? So anything that is showing us where we can potentially jump on our trade at is a zone. Do you understand? That's our area of interest or point of interest. Now we'll look at these things, and then the next thing we'll look at is once price taps down our zone or area of interest, look for confirmation. Do you understand? So everything we're going to talk about today, we're going to look at it. Is it a zone? Do you understand? Is it another way of looking at market structure? Is it an entry confirmation? So we look at it, you know where to place it when you are doing analysis. Are you guys getting the idea?
Yeah, yeah.
Good, good.
Yes, sir.
So the
Yeah, we are
first, the
getting it.
first, the first one on the list, the very fat elephant in the room, is the whole concept of order blocks. So you guys get to hear this one a lot, and then most times when I finish teaching people, and then they ask, "So you don't go teach us other blocks?" And I'm like, "Nah, you don't need it." Some people feel it's I don't want to say they feel it's a lie, but then they feel like they whine them. Do you understand? They feel like, oh, I'm whining them, and then other blocks is something that's supposed to change their trading game, and then I don't want to tell them. So the first thing we look at is other blocks. Other blocks. Do you understand? So let me list them out. The second thing we look at is liquidity. I don't forget how to spell liquidity.
No problem. Trade as long as I fair.
Liquidity
Right,
and so under this
understand.
liquidity, under this liquidity, we'll still look at the concept of the concept of liquidity grab or liquidity sweep, whatever, liquidity grab stroke sweep. Jerry, what are those other things? Okay, fair value gap.
Inducement.
Breaker block.
Yeah, fair value gap.
Inducement too.
Fair value gap. That's FVG.
It's inducement.
Breakers. Sorry, let me make that. Because breakers are more or less a consequence of other blocks.
Breaker
Then this one that I say inducements. Now you dey try deliver picking. So
But
what
Sir
other one
Scooby,
again?
Sir Scooby, all these things they under SMC, ba?
Yeah. Most of them are concepts under SMC, yes. SMC and then ICT, yes.
Okay, okay.
Any other thing you guys want us to take a look at? Okay, so let's begin now. Michael,
Yes.
who say yes?
Um, fake and this fake breakout. Sorry. What's the name of this thing?
Manipulation.
Market makers. Blah blah blah. Fake breakout, something like that.
I mean,
Hey,
a
what's
manipulation
the
you talk about. Market manipulation.
so, yeah, something like that. I've forgotten. Like the market makers, they take out the stop loss orders.
That's under
It's a
liquidity.
fake. Okay.
That's liquidity.
Any other thing? So I'm going to pin this thing right here. Now here the thing will sit down. Do you understand? So start looking at them one by one. So before we continue, I want to say something again. Michael was asking if these things are under SMC or ICT. Now, if you hear statements like SMC, which is smart money concept, ICT up to that, I never know what to be the full meaning. Yeah. Wait though, I'm supposed to know ICT now. Inner circle trading, yes. So all these things are different schools of thought. Do you understand? I'd like to look at that different schools of thought that um used to trade. When I say schools of thought now is within those communities or within those like schools of thought, they have different approaches to the market. Do you understand? So they look at the market from this whole perspective of, oh, we're treating like the big banks, we're treating like the investors, all that sort of stuff. There are other things investors are doing that they are not telling you. We're going to uncover them, that sort of stuff. So that's more or less like the approach. Do you understand? So, like I told you guys, just like any other thing in the market, it's always going to be high probability. Do you understand? We'll have wins and then losses. Do you get? So we're going to uncover all these things. So first things first, other blocks. Now, other blocks by definition, yeah, by definition or by description is more or less the opposite candle before a move in any direction. So if I have a move to the upside, if I have like a break to the upside now, another block will more or less be the opposite candle before this bullish move. The opposite candle now will be the last bearish candlestick before this move to the upside. Do you understand? So it's the body of the candlestick. Now, for let's say a downtrend now, let's say price breaks to the downside, another block is more or less going to be the last bullish candlestick before that move to the downside. Are you guys getting the idea?
Yeah.
Good. That's what an order block is going to be. So let me go to something like okay, good. So no, here it's much more like choppy. Also, here it's ranging. Please, is it the wick or the body? It's the body of the candlestick. So let's go to something like gold. I think gold was trending last week. Let me use this thing, gold charts. Also, I know open rubbish for my Safari.
Yeah.
What's happening?
Nothing.
What's it talk here? You guys are not well.
Nothing.
Kelvin, you know I'm recording this thing for YouTube. Study make rubbish noise.
Sir?
BTC has been doing like this whole nice downtrend for a while now on the daily time frame. But then that one is bygones be bygones. Let's look at. Wow, interesting though.
I used that flex today now.
Nice one, nice one. So if you look at this whole uptrend we have here, yeah. If we're looking at this whole push to the upside, this one that price created this higher high and then started retracing. If we're looking at our other block, in short, before we start looking at our other block, we're more or less looking at where would this retracement possibly stop before the next buy? That's what we're bringing in our other block to show us where the next move starts. So remember, we said that the the other block is more or less the opposite candle before the move started. Do you understand? The last one before the move started. So in this case, our other block is going to be this whole red candlestick here before that push to the upside. That's going to be our other block. So what we'll be looking at now is price come back, tap into this level, and then we get buys to the upside. Are you guys getting the idea?
Yeah.
So this one is more or less the whole other block in this uptrend. So if I have something like a downtrend, something like this, here like this, the other block is going to be still the same, the opposite candles before what the move started. In this case now, is going to be this candlestick here. That was the opposite candle. That's the last candlestick before the move started. The last bullish candle before they pushed to the downside. Are you guys getting the idea?
Yes, sir.
Okay, so let's go to something like, hope my voice is not breaking.
No.
Okay, so it's Jerry's network that is bad. Let's go to something like USD card and then take a couple of examples. Let's see. Should we leave the weeks? Yes. When it comes to using other blocks, you leave the weeks. Please, I want to say something very, very important. Those of you that are already used to using things like Fibonacci to trade, things like support and resistance, support, staunch, resistance, resistance, staunch, support, please and please, you can stick to it. I'm just showing you this one so that you know what it is. I am not telling you to switch and then start using this one to trade. Do you understand?
No, now.
This one that I'm actually even showing you guys this thing, self, I'm actually doing you guys a bad thing, self. Because most of you now, once and trend line don't work again or Fibonacci doesn't work again, you want to run and go and start using another thing.
Now part of learning now.
So now, in this case, now let's look at this whole market here. This one is quite tricky, but then it's all right. High, low, the price created like this small, or this thing is one move to the upside. Consider it one move to the upside, I think. Let's look for another example. I know USD card had like a couple of examples that I traded sometime last week or so, where I had price tap other block. Yeah, something like this. After price created like this whole low, lower high, then lower low. If we're going to highlight the other block, is going to be here. This will be our other block. This last bullish candlestick before they push to the downside. So we'll be looking at price tapping inside so that we get the sell. So once price comes back to tap inside, that first candlestick taps inside. So that's going to be our entry point, something like this. And then we target like down here, maybe stop loss slightly above here. Very, very, very easy. Now, for those of you that
How
are
much is
looking
the
for,
reward there?
it is very, very small. Yes, I understand. Now, for those of you that look for extra confirmations, once price taps this level, you drop and go to your entry time frame to look for entry confirmations. Are you guys getting the idea? So you look at price tapping there and then getting that whole sell confirmation before selling. So something like this to the downside. Do you guys get the idea?
Yeah.
Okay,
Yes,
good.
boss.
So a buy example is going to be the opposite. I mean, I must do example for buy situation. We don't have time. Should we use the rejection below the 2-hour time frame as an entry confirmation? Wait. No. Go to your entry time frame. If you're looking for where you should enter here, I have a video on top-down analysis. Watch that video. It will answer all these questions about time frame. Today, we don't have enough time to go into details with all these other things. Do you understand? Please. So just remind me after the class. You can send me a message and then I'll drop the video on top-down analysis. Watch it. It will help you. So if you look at this, we had like a shift in market structure down here. Price shifted, sorry, created lower low, lower high, failed to create another lower low, broke above and started creating higher high, higher low, then another higher high. Do you understand? So in this case, if we're looking at price coming back to tap, if we're looking at price coming back, one second, let me see something. If we're looking at price coming back to tap the other block, now, first of all, we need to identify which one is our other block. It will be this level here. The last opposite candlestick before the move to the upside. Someone's mic is on and then it's noisy.
I mean, when I off on the mic, I'm trying this thing.
So we'll be looking at price coming back. Sorry, coming back to tap this level. Sorry. We'll like a price to come back, tap this level, and then we get buys to the upside, something like this. So yeah, this is what we'll have. So the moment price gets into that level, you'll be looking to buy. So the moment price taps inside now, you'll be looking to buy immediately or look for entry confirmations before you buy.
I will.
I mean, I am on mute. I am muting you and you're muting yourself.
Boss.
So something like this, and then we'll look at a reversal to the upside. So personally, I like to look at it that other blocks is more or less like another way of using, I don't want to say another way of using support and resistance, but it's almost similar. The difference here is that you're picking the bodies of the candlestick, not the wicks of the candlestick. Do you guys understand?
Make this person mute himself now.
1 second, come in. So do you guys get the idea?
Sorry, sir. You say like for this other block, we have to look for the body of candlestick to enter in our zone before we take the trade.
Okay. So wait. First of all, yeah. The body of the candlestick is our zone. Now we have to wait for price to tap into that zone. Do you understand? So the moment price is coming to that zone, if it's a live chart, it's going to be a body of a candlestick. Do you understand?
Okay.
Yeah. Someone said it's almost the same thing, support and resistance. Yes, it is. So now, breakers now are just like the breakers are more or less like other blocks. But they are looking at it.
Are you hearing me?
Whole picking there on the loose like this. So
On the loose.
breakers are more or less like support and resistance field, but then in terms of other blocks. So what does that mean? So if I have, let's say in this case, price is pushing up and then I have an other block, that's the last opposite candlestick before they move to the upside. If price comes back to break that level, that's break that candlestick to the downside, automatically it turns to a breaker. Do you understand? So once price goes back, I'll be looking at price tapping that level. That's getting back into that. Are you guys getting the idea?
Yes, sir.
No. For this breaker, no.
I'm missing this boy and he's missing himself.
So
now you go get problem.
I said the guy don't left.
Say don't left. So let me explain this thing again, yeah. So remember, we said that an order block is more or less that's the last opposite candle before it moves to the upside. Do you understand? So something like this. If I have, let's say that's the bearish candlestick before this whole push to the upside, that's my order block. Do you understand? So I'll highlight this whole level as my zone. Do you understand? The body of that candlestick will be my zone. Do you understand? So once price gets into this level now, I'll be looking at price stopping here and then buying to the upside. Yes or no? Are you guys following at all?
Yes, sir. Yes, sir.
Good. Now, if price doesn't stop here and then buy to the upside and then breaks it to the downside, sorry, that bearish candlestick now we turn to a breaker. So I'll be looking at price going back to tap that level. Do you understand? And then stop there and then sell to the downside. It's more or less like support turn to resistance. But then in this case now, instead of highlighting the support zone, it's going to be that whole other block. Do you guys get the
It's
idea?
getting clear now. Yes, sir.
So that's what a breaker is. So if it's this one is a bearish breaker, they'll call this one. I forgot to, but then some they'll call bullish breaker, some they'll call bearish breaker. I think it's this one that is the bearish breaker. Then they want that to be bullish candlestick would be a bullish breaker. So that one will be something like this. Let's say price is selling to the downside, and then we got that whole other block. That's the last bullish candlestick before they sell to the downside. And then we highlight it. And then we're waiting for price to go back there and then stop for a sell. Price gets there, doesn't stop, and then breaks it to the upside. That level now turns to a breakout. What that means is that while looking at price coming back to that place, stopping there and then buying to the upside. Do you guys get the idea?
Yes, sir.
Yes.
Good. So let's take a couple of examples.
Sorry, sir.
Yes.
For this, like when like the price continue to move downtrend,
Yes.
this one you can call it like a change of character of this market.
It's actually a change of character. That's if you mean a change of character is the market changing from one trend to another, then it's a change of character.
Okay.
Yeah. So let's look for a couple of examples. Oh, Fibonacci. We will see breakout today, so I think I saw some trades with breakers on gold. I'm not sure actually. Abi was it NZDSD or EDSD? Let me check EDSD.
So, sir, if they are hard to find, so that means
No,
taking
no,
trades
it's not that they
with
are
this
hard to
stuff.
find. Do you understand? It's not that they
Yeah.
are hard to find. It's just that I don't use it to trade. So to a certain level, I've not trained my eyes to see it. Do you understand?
Okay. Okay. Okay.
I can easily spot like support on resistance on support than breakers.
Okay. Okay.
Okay. That's a low, high. Okay, this one did not actually break below, so it was not an order block. This one that would have worked for us, but it's now another block. Someone said that I don't understand. Can we do top-down analysis for the No, we cannot do top-down analysis today. Do you understand? I would send you a video on top-down analysis. Don't worry about it. Oh shit. Even this one did not tap inside.
I think he means can we do top-down analysis for other blocks?
Yeah, you can do top-down analysis for other blocks. The thing is, where that time frame where you're supposed to look for like your zones to enter your trade. In that case, now instead of looking for something like support or resistance or Fibonacci, you look for other blocks in that case. So let me do something. So now, If you look at this, you see that price was actually creating an uptrend. So let me zoom in. Price was creating an uptrend. We're having series of like higher high, higher low, higher high, higher low. Then price created another higher high here. If you look at this, you see that price actually broke above this level here. This one here. Do you understand? So the other block in this move to the upside will be somewhere around here. The last bearish candlestick before that push to the upside, it will be this one here, this red one. Yeah. It was from there that price started like pushing to the upside. So that would be our other block. Now, price came back to that level and then failed to react. Do you understand? You can see that it tapped inside and then started pushing to the upside like it wanted to buy, but then it came to the downside and then broke it. That level now we turn to our breaker. What this means is that we're looking at price going back to tap this level, then we get a sell from there to the downside. Do you guys get the idea? Just like support turns to resistance, resistance turns to support. Are you guys getting the idea?
Yes, boss.
Yes, yes.
So let's see how price behaved. So the moment price gets into this level now, we'll be looking at selling. Let's see, stop loss slightly above here and then target down here. Or you can drop to lower time frame and then look for a confirmation. Something like this. Do you guys get the idea of this whole breaker situation?
I must ask this sweet for the example.
See, what I'll say is that, Bab, this whole thing is just like any other zone. Do you understand? You have to first of all learn what it is, learn how to identify it. Do you understand? And then build confidence with it to start using it to trade. Do you guys get the idea?
Yes, sir.
Yes, sir.
Good. So we're going to stop here for today. We still have our list. So next week we'll continue with our list. Which currency pair did I even write that thing on? I think it was NZD/USD. We'll continue with our list. We have the next thing we're supposed to talk about is liquidity. Liquidity and then liquidity sweep or liquidity grab, then fair value gap and then inducement. So we talk about those ones subsequently. For now, we'll take questions. Do you understand? We just have 3 minutes. We take questions and then after that we call it an evening.
We no last for today.
So yeah, I'll post the recording of the class. Does other
So we have 6 minutes left.
someone asked, does other blocks really work? Honestly, yes. See, I'm not answering the question from a perspective of other blocks is 100. Do you get what I'm just going to tell you is that it's a high probability trading system. I know traders that use other blocks to trade. Do you understand? So it's just like any other thing you pick to learn or pick to use to trade. Just know how to use it very well. Do you get? Know how to use it in combination with things like trends, things like top-down analysis. Do you get? Why personally I did not use things like other blocks, because other blocks were the first things I learned, like other blocks, breakers, all this liquidity, not liquidity per se, fair value gaps. They were the things I started using to trade when I first started trading. There's even this screenshot I have on my Instagram that I used accumulation, manipulation, and distribution to catch a trade. So initially, I was more or less introduced to ICT before I switched to start using concepts like support and resistance, Fibonacci, and all. Do you get? Why? It was because the people that taught me all those ICT concepts made it very, very complicated. Do you understand? And that's why we're doing this session, because I don't want a situation whereby you go and fall prey in somebody's hands that will make the thing look like Alpha and Omega, and then it's still the same talk we're talking. Do you get? So they made the whole thing look very, very complicated and look like, oh, if you have not learned down. In short, I used to be boasting to my friends that, more if you know Sabi trade ICT, you know even Sabi anything, that sort of stuff. You get? But then I just knew what they were. I don't know how to use it to trade. So the whole thing is you need to know how to, you cannot just, I think the problem was that they were just teaching us just other blocks and then fair value gaps, and then they'll not teach you how to combine it with trends. Do you understand? Let's say you just join a Forex trading class, and then instead of teaching you market structure, they go and then start teaching you other blocks and then fair value gaps. You don't know what to use it for. Do you understand? So I think when I started looking at concepts like support and resistance, because I used to downgrade them, I used to be like, this one is baby stuff. And then Fibonacci, I discovered that they actually work, and then they are like simple. So why stress my head? That sort of stuff. So I think that's why I stuck with them. Do you get? So it's a thing. See, I'm not blasting anything. See, I'm not blasting anything. I'll even advise you, if you find them simpler for you to trade, use them and trade. You understand? That's my own ideology. I don't care whether they wake up, do abracadabra, see bias position. As long as you make money, I really don't care. It's just it. So that's
Scooby,
we'll call it a day. You guys will ask questions on the group. And for those that will be watching this video on YouTube, like and subscribe to the page. Yes, let's get my YouTube subscribers to 500.
Yes, please, Otori Olon, you push subscribe, please.
Yes, thank you very much.